Hi, welcome to this week's Stockscores Market Minutes. So there's some simple things that tend to happen when stocks are about to make strong upward trends. I'm going to teach you what those are in this video. I'll show you a couple of examples of how they work, and I'll tell you that most of the stocks that outperform the market will do exactly what I'm going to teach you in this video. So stick around, make sure you're subscribed to the channel. Let's dive right in. So top performing stocks usually do the following early in their upward trends. They make an abnormal price break with abnormal volume from optimism, breaking out through some resistance, and they surprise the market with strength. Now we're going to keep it simple, and I'm going to explain why this works. So let's dive into a couple of charts where this has happened. First one is a top performing stock of the last few months. This is Trivago. TRVG is the symbol. And what I want you to notice is right here. This is when the stock made an abnormal price gain. You can see it visually, it stands out. The volume was more than normal. Now I said it has to have optimism. So what do I mean by optimism? Optimism occurs when the bottoms are rising from left to right. Notice over here on the left, we have a falling top, a falling top. See how the tops are falling? We never want to be a buyer when the tops are falling. We want to wait for the bottoms to rise. Now, with hindsight, we could say, oh, we should have bought there, but that's actually not a high probability place to buy. So we've got a rising bottom, a abnormal price break with abnormal volume, but there's more to it than that, because I can also draw a line across these tops, and in doing so, I'm defining a line of resistance. So this is where we can say that there is a breakout. Now I'm going to show you a day trade at the end of this video where this exact thing happened on a stock that gained almost 400%. But let's stick with the longer term trading for now. So we've got optimism, we've got a break through resistance from low volatility. That was the last thing I wanted to highlight. See how the stock is quiet here? And then we have a surprise. That's what we love. A surprise bit of abnormal price movement with abnormal volume from optimism through resistance, and that started the stock moving from 260 and change up to where it is now, $5.40. That's a 100% gain in just a few months. Now, they don't all do it this well, but this is the type of thing. If you go look at stocks that outperform the market, look at the strongest stocks of the last 3 months, 3 days, 6 months, whatever, you will see almost all of the time that they start with this little formula. Now, I'm going to expand on this formula in some free weekly classes coming up this week. I'll elaborate on that in just a moment. Now, the next thing we're going to look at is a stock called LX, Lexin FinTech Holdings. Here is the critical day. This was the day that I put a buy recommendation on the stock. You can see the abnormal price action, abnormal volume, optimism, low volatility, and a breakout through resistance. This pattern is called a pennant pattern. Anyone that studies technical analysis a little bit will know all about that. So we've got the breakout right there, and look what happened. Now, one other thing that I've created to help you with this is the sentiment stock score. That's the green line down on the bottom of the chart. And typically, when stocks are breaking from optimism, they will have a sentiment stock score of at least 60. So why does this work? Well, you have to think about the market as a place where the buyers and sellers are arguing back and forth about what a company is worth. And they do so based on information, their interpretation of information, and emotion. Emotion plays a big part in this as well. So when a stock is quiet, when it's trading with low volatility, what it really means is that the buyers and sellers agree more or less about what the stock is worth. When you get an abnormal break from that low volatility, it implies that some new information has come into the market that justifies investors paying a higher price. Now, the stock market isn't fair. Some people get information before others. So when we look at this stock, again, LX here, right there, there's some people that follow the company very closely that learn of that new information first. They buy aggressively with strong volume. Optimism was building because we have a rising bottom, and that's why our sentiment stock score crossed above 60 early in October, and then it broke from low volatility with abnormal activity. Now, as more people learn about that positive information, the stock starts to move into an upward trend. We don't want to listen to the news or wait for the news or wait for the media to catch up because they react. We want to follow those that know the most. And all we have to do that is look for abnormal activity. Now, again, I'm doing some free sessions coming up this week, and I will show you in more detail how I do this. I'll show you the tools that I've created to find them. So if you want to register for any of those events, just jump to my website, stockscores.com. Scroll down the page a little bit to where it says upcoming events, and there you can register. Our first one is how to analyze any stock in seconds. I'm going to elaborate on the skills that I've taught you so far in this video. It's about an hour long and it's all free. And not only will you get this free 1-hour class, but I'm also going to give you a copy of my book, The Mindless Investor, an electronic copy. We will email that file to you so that you can read this book that I've written, which has been very popular. In fact, it's sold out in the hardcover. We only have electronic copies available. So again, go to stockscores.com. On Wednesday, I'll focus on investing for those that just want to manage their portfolio better. And for those that want to learn how to day and swing trade using my methods, we'll talk about that on Thursday. And then Saturday, I will show you the tools that I've created and which really can help you do well in the market as well. All right, well, let's get into this week's market analysis now. And we're going to jump to the charts again. We're going to go to the S&P 500 ETF, SPY. And so I go to Stockscores, punch in SPY in the top left. And here you can see the chart. And so what you can see here is that the stock has sold off quite, or not the stock, the market has sold off quite significantly since mid-February. And that's why the sentiment stock score is now pretty poor. In fact, it started to get poor third week of February when it started to soften. Now, we don't use the stock scores to sell. We have better indicators for that, but it has been a market to avoid since that middle of February, third week of February. So the upward trend line here has been broken. That's a negative. We've fallen lower, but in the short term, we probably are making a bounce. And let me say or show you why. Because here you can see that the downward trend line has been broken right in here this past week, and we are building a rising bottom. Now, the last step for a little short-term reversal is to move up through this 570 level on the SPY. If that can happen, then you'll see a little bounce back. But I wouldn't get too excited about it because the 3-year weekly chart still shows that this upward trend line has been broken. I think we could come up to the highs at best and get stuck and maybe go sideways. But the other thing that could easily happen is we could have a little bounce back for a week or two, build a falling top, and then break lower again. So make sure you're subscribed to the channel because I do this analysis every week for you. You don't have to worry about whether you can read these charts or not. Right now, I would say in the short term, a little bit of optimism, but generally it's a neutral situation, and the longer term market still has some issues. Let's take a look at the NASDAQ market. QQQ is the symbol. And let's go to the short term chart first. So the 1 month, and there you can see, there you can see the downward trend, resistance right here. We're building a rising bottom, so it's got promise in the short term. We need to break up through this ceiling. If we do, yeah, we'll get a little bounce back. But let's take a look at that 3-year chart. It still shows that this upward trend line has been broken from a sort of double top. And that means that we might get a little bounce back, but then could roll over. So I want you to be cautious with the overall NASDAQ market as well in the short term. How about the Russell 2000, IWM? Well, you can see that we've been weak for the last 3 months. If we go to the 3-year chart, the long-term trend has been broken from a falling top. So that's not a very good sign for the small caps. However, they are oversold right now and they can bounce back. How do we know that? Well, let's go to the 1-month chart, and there you can see downward trend line, build of a rising bottom, and we actually started to break out from that rising bottom after the Fed made their announcement on interest rates, which was essentially no announcement, but indicating that there could be a couple of rate cuts. And of course, interest rate cuts would be good for the small caps. So we're getting better on the small caps, but not great. However, I'll say this, the best trading opportunities are coming from the small cap sector. Even though the overall sector is not that great, every day there's a couple of stocks that make 50, 100, 200% moves. There was one that I'll show at the end of the video that was up 400% on Thursday. And so there is opportunity in the market, not only in buying what we call alpha stocks, which is the stocks that are trading abnormally, but you can also make money right now on the short side by buying the inverse ETFs. Things like SDS, Sierra Delta Sierra, is an inverse of the S&P 500. So if the S&P 500 goes down, you can make money by owning the SDS and riding it to the upside because it's an inverse related exchange traded fund. All right, let's continue with our charts, and we'll start next with the Canadian market. Let's take a look at T.XIU, which is the Toronto Stock Exchange. Now, the Canadian market, much more heavily influenced by commodities, and we're going to see why the Canadian market has actually held up better than the US markets when I show you some of these commodities. But you can see that, yeah, we've broken the upward trend line on the daily chart. We've made a little bounce back this week. We are now dealing with this short-term downward trend line. It could come up into here, get stuck. We'll see if it can break that. Let's look at the short-term chart, the 1 month. And there you can see that we're really still below this trend line. And so until we can break that from a rising bottom, we are building rising bottoms, but we need to break that downward trend line. So I want you to be fairly cautious on the Toronto Stock Exchange as well. Now, what's guiding or supporting the TSX? Well, gold is a big factor. GLD is the ETF for gold. Let's look at the 3-year weekly chart, and you can see that it's just done phenomenally well. Hey, when did it start doing phenomenally well? How about right here? At least in the last year, that was the buy point. It has all of the same characteristics that I taught you earlier in the video. We've got strong resistance, we've got low volatility, we've got an abnormal price break with abnormal volume from optimism. That was the signal to be a buyer of gold, at least in the last year. There's actually some more if we go back farther, but this is the most recent. And so that's a move from 200 to 280. That's a 40% gain on a simple ETF based on gold. Let's take a look at the oil market, USO, and we're going to look at the 3-year first here because the long-term picture is slowly building, slowly, and I mean really slowly. If I draw a line across these bottoms, you can see there's optimism. I can see there's a line of resistance. Every time we come down to the bottoms here, we get a little bounce. And so oil probably is going to make a bounce to the upside. Not tremendous upside on the bounce, but still something that could happen. Now, if we look at the 1 month chart, we can try to look for the signs of the bounce. And so here is our downward trend line. We're building a rising bottom, and we just need to break from that. It started to do that Friday afternoon. We could see a little bit more of a bounce back in oil. Do I think it's going to be exciting? Not really. There's not a lot of upside on that bounce back, but something to watch for and maybe bottom fish a few oil stocks. All right, now we're looking at the US dollar ETF. This is UUP. And you can see that it is basically stuck in a sideways range. It has really suffered with all the tariff and trade war talk that has hurt the US dollar. If we look at the 1 month chart, there you can see the trend is down. A month ago, well, probably 2 months ago, I was kind of bullish on the US dollar. That has really changed in the last couple of months. Finally, let's take a look at the Bitcoin. Actually, we're going to look at one more chart after that. So here's Bitcoin. Long-term picture, still pretty good. We're in an upward trend. The bottoms are rising. We're approaching this trend line where it should bounce. In the short term, kind of ugly. If you're in Bitcoin, you know that we've been generally moving lower. We need to break this downward trend line. The rising bottoms are forming, so it's promising, but we need to break that downward trend line to start the recovery. And the final thing we'll look at before we get into my ratings is the bond market, TLT. And you can see that on the bond market, we were in a downward trend. We broke it. And so we're starting to grind higher as the market starts to think about the potential for lower interest rates. It's not really gathering much momentum yet, but the stock score is getting better. You can see it's a sentiment stock score of 60 when it was really below for a very long time as the market was moving lower. And of course, if this is going up, that means interest rates are going down. So a very important chart for us to watch. So my ratings then, On the US large cap and NASDAQ, neutral on both time frames. A little bit of a sign that we'll get a short-term bounce, but still not conclusive that that will be the bottom. US small caps, short-term neutral, long-term bearish. Canadian stocks, neutral on both time frames. Gold, bullish, bullish. And oil, US dollar, neutral. Oh, sorry, I've got neutral there for oil. That should be in blue. So neutral for oil, bearish for the US dollar in the short term, and neutral long term. Bitcoin short-term bearish, but still long-term bullish. We're approaching that trend line where we should see a bounce. And bonds neutral on both time frames. All right, so now we're going to apply what we learned at the top of the video to a day trade that happened this week. It was one of the best performing stocks of the week, and the symbol is PSTV. Now, this chart that you see on screen has a few extra things on it. You can see these little yellow dots and pink dots. Those are indicators that I've developed called action candles, and I'll talk more about those indicators in that session we do on Saturday this coming week. So again, you can register for those. They're free on Stockscores.com. Now, the reason I like to trade PSTV was because it was trading abnormal volume. We talked about that at the top of the video. That abnormal action tells us something is going on. I don't want to chase stocks when they run away from the trend line. Never want to be a buyer. That's for FOMO traders, so do not do that. What we do instead is wait for the pullbacks and the break of the pullback with some abnormal action. So we move up, we pull back, we break the pullback. That's a buy point. That's a buy point. We run up, we pull back, we break the pullback, and it runs up again. This is a strategy that I teach called an intraday pullback play, and you can learn more about that in the webinar on Thursday. I will talk about some of my strategies for day and swing trading. Hopefully you've enjoyed this video. If so, please click on the like button, subscribe to the channel, and most importantly, trade well.